Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
It's a new trading day. Welcome to Modern Investing Techniques, episode 49. It's May 21st, 2026, and I'm Patrick in Vancouver. Let's get into the numbers, the strategy, and today's AI-selected trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Nvidia, topping expectations, hands Canadian TFSA holders in AI names a potential re-entry window, but only if volume confirms the move before broader rotation hits. U.S. equities closed lower as higher oil prices pushed bond yields upward. The S&P 500 finished at 7,404, down 0.4%. The NASDAQ Composite settled at 26,121, down 0.6%. The TSX Composite moved against the tide, rising 0.2% to 34,246, supported by resource names. Sentiment stayed cautious after signs of fatigue in recent AI leadership and concerns over sector concentration. With the broader tape setting the stage, let's look at the precise filter that turns an earnings beat into a tradable edge. Earnings beats in high-profile names like Nvidia often trigger immediate price pops, yet the real edge comes from requiring volume confirmation above the 20-day average before committing capital. Today's market shows exactly why. Without that filter, capital can rotate into higher beta AI plays and leave earlier positions behind even when fundamentals remain solid. Implementation is straightforward on any platform with volume data. Pull up the daily chart, compare today's share volume to the 20-day average, and only size the position if the beat coincides with at least 150% of average turnover. This approach worked best during the 2023 to 2025 AI expansion when volume spikes reliably preceded multi-week runs. It fails when volume is light because the move is driven by short covering rather than new institutional buying. The recurring lesson from recent rotations is that multi-year visibility alone cannot protect against sector rotation. Volume is the missing gatekeeper. That same volume discipline shows up immediately in today's simulated flash trade. This is a simulated trade for educational purposes only. No real money is involved, and this is not financial advice. Today's pick is International Business Machines on the New York Stock Exchange. The U.S. administration's Grant for Stake program for quantum-focused firms provides the catalyst for IBM and similar names. The stock is trading above its 50-day moving average on the daily chart, with volume near the 20-day average. Nearest resistance sits at recent swing highs. We set a stop 2% below entry to cap any same-day loss, and target 1 to 2% intraday on positive follow-through. Is medium because we have a single strong policy catalyst with sector tailwinds, but lack of volume surge today. This trade demonstrates how to evaluate a policy-driven catalyst in real time while respecting the volume confirmation rule we have learned from prior rotations. Listeners see the full decision framework applied to a name outside the usual mega-cap AI cohort. After seeing the framework in action, here's how yesterday's valuation play performed on the same discipline. Yesterday, we simulated a flash trade in PayPal as a valuation play on durable free cash flow and aggressive buybacks at depressed multiples. We entered at $44.22 at the open and exited at $44.28 at the close. The position gained 0.14% for a $1.36 profit on a $1,000 simulated stake. The valuation setup delivered modest stability on a down day for growth indices, showing that depressed multiples can act as a buffer when momentum names rotate. The key takeaway is to pair valuation screens with a same-day volume check before treating any rebound as confirmed. With execution rules now sharpened, let's compare the platforms that actually let Canadians act on them efficiently. Quantum computing exposure via equity stakes gives retail investors indirect exposure to quantum names through ordinary brokerage accounts rather than specialized venture vehicles. Investors can screen for IBM and similar recipients on any platform with U.S. market access, then size positions using standard position sizing rules. This approach suits tech-curious TFSA holders who already hold broad AI exposure and want a policy-backed diversifier. Generic GLP-1 access in Canada lets Hims & Hers offer Apotex's generic semaglutide through its Canadian platform following Novo Nordisk's patent expiry. Active investors can add the name to a healthcare watch list and monitor prescription volume trends as a real-world proxy for obesity drug demand without needing clinical trial data feeds. Both ideas screened for TFSA-friendly, policy or volume-backed setups. Once the account is set up, here are 2 fresh ways to gain exposure without leaving your brokerage. Stellantis outlined a €60 billion turnaround plan that includes launching 60 new models and deepening partnerships to address excess capacity. Add the name to a global auto watch list and wait for volume confirmation above the 50-day average before considering any position. Eli Lilly reported retatrutide showing 28% weight loss results in a key trial, positioning the company for potential regulatory filing next year. Review existing healthcare ETF holdings for rebalancing toward names with late-stage pipeline catalysts. Walmart posted strong quarterly results, driven by same-store sales and delivery speed, even as management flagged economic uncertainty. Trim consumer discretionary exposure if Walmart closes below its 20-day moving average this week. Deere beat estimates but kept full-year guidance unchanged as improved demand for smaller equipment offset softness in larger machinery. Hold farm equipment names only if they maintain support at the 200-day moving average. Before we wrap, a few quick actionable notes from today's headlines. Our simulated portfolio stands at a cumulative loss of $3.30 across 21 trades. The win rate sits at 57% with 12 wins, 8 losses, and 1 break even. Average return per trade is negative 0.01%. The best trade gained 13.36%, while the worst lost 11.35%. Our AI analysis is learning from patterns around volume confirmation and adjusting position sizing accordingly. That wraps today's episode. Remember, the first loss is the cheapest loss when you respect volume. Open your brokerage screener, filter for NYSE tech names trading above their 50-day moving average with today's volume at least 120% of the 20-day average, and add the top 3 results to a dedicated volume-confirmed watch list for next week's review. Before we wrap, watch for fresh volume data on quantum names and healthcare names tomorrow morning. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?